What's up? Good morning, good afternoon, good night, wherever you're tuned in from. Welcome to the BitLab Academy daily live stream, Monday through Friday, 10 a.m. Eastern time, 10 to about 11:30, 11:33, somewhere in there. We try to give you about an hour and a half and just break down what's going on in the market. Now, today's stream, we're going to be breaking down how we can spot reversals, how we can not only use the price action in the chart, technical signals, TA, all these different tools that are in our tool belt so we can really make the most out of what's happening in the market, not become a slave to donating our money to other people because we're making emotional trade decisions. This video is going to be an evergreen video. It's going to be in the daily alpha folder as well. Of course, we are going to be utilizing price action from today, right now, May 11th, 2023. However, you could tune back into this in 6 months, a year, any time frame, because these skills and these strategies and these tools will be invaluable for you to be able to identify how you can sort of set yourself up to take advantage of what's happening in the market. Now, my name is Kellam. Welcome to the daily BitLab Academy daily live stream. I just want to say how much I appreciate everybody being here. If you're in chat, if you're an OG, throw OG in chat. Let's see how many OGs we have in here, meaning you've been here from the first week or two that we started this stream a couple months ago. It's about really about 3 months ago now. If you're watching this in the future, I do want to encourage you, actually, if you're watching this anytime, join us here, hit that like button, hit that subscribe button, ding that bell, get engaged with us, because we spend a lot of energy here with our team, not only here at BitLab Academy, the mods that do such great work, also the Hit Network team, the BitBoy Crypto team. As you can tell, we've got a lot of different personalities within the Hit Network between me and Ben, BitBoy Crypto, TJ, Frankie Candles, DZ, and Tim from the Investor Bros is on the team now. And so it doesn't really matter who you like or dislike. The point is here, we're giving a broad range of different voices with different opinions and different ideas about what's going on in the market. And that's the healthiest way to really dissect what's going on. If any of us have a myopic vision, a singular point of reference as to what we know the market is going to do, then we're setting ourselves up for failure. Now, throw us a 1 in chat. Throw me a 1 in chat if all the audio and visual is good. Everything should be looking good today. And let me know how you're feeling. Are you feeling good? Throw in vibing. Are you feeling a little stressed? Throw in stressed. If you just have no idea what's going on in the market and you're happy to hear, throw in on fire, baby. Now, big love to everybody. We're going to be breaking down a lot of stuff in today's show. Now, what I want you to do first is make sure you come over, follow me here at Kellam, Kelly, Kellam. There's a lot of fake accounts out there. Make sure you're following the correct one. I'm pushing right around 20,000, 21,000 followers. And there's a lot of great material on here that you can reference on my own Twitter page. Now, of course, at the start of the show, I got to tell you, come to BitLab Academy, hit that follow button, come down to today's daily post here, retweet this post, hit that like button. You are entered to win. I have it pinned in the top of the comments as well. You get entered to win. We draw every Friday. It could be $100 in stablecoin, could be lifetime memberships to the new BitLab Academy, could be lifetime memberships to the indicators, could be multi-month memberships. There's a lot of stuff here. We just want to appreciate you all helping support our community and also giving back by helping spread the word, letting your friends and family know, sharing with your social media followers as well, letting them know there's somewhere they can come that breaks down what's going on in the charts, not just doing TA at you, but doing it with you and breaking down how, why, what, where, when. That's what this is all about, bridging that gap from beginner to pro. So let's talk about what's going on today. Now, again, this video is meant to be watched. Of course, you can watch it live here. And if you are watching over at Hit Network, make sure you come over at some point and follow us. These are all the socials down here. And you can also see the bitlabacademy.com. The new site is up, by the way. We've talked about this quite a bit, but there's the new site is up. Let me see, BitLab. The new site is up, and we can see right here, this is the new site. You can come if you want to join. We're still in a little bit of the hammering out some small back-end details. So if there's any issue, it's okay. You can come over to the fact page, FAQ, frequently asked questions is what FAQ stands for. You can come down here and contact us if you have any issues. We did have a little bit of an issue last night that we are working out with because it's all new servers and stuff. But in the future, when you want to sign, all you have to do is click this enroll button right here. If you want to, just sign up for some of the free courses, BitLab, Bitcoin 101, Blockchain 101. There's a whole crypto beginner section that has a, almost said smattering, small selection of lessons from each one of the courses. You can just click right here, start your education for free, and you'll see you got two options. You can come right here on this right here, sign up for free today, and that has all of the free access stuff. And then if you just want all access, which gives you access to all of the courses, which we can see are right here, and there's a lot more that's coming. We are still in process of filming. There's going to be more stuff that's added to this on a regular basis over the course of the next years. Okay, so just don't think that this is all there is. And of course, trading strategies is one of the areas that we're working to fill up a bunch more strategies. So don't worry if you get into any of the courses and you feel like there's something not in there. There's a lot. I mean, there's over 100+ lessons in there currently. So make sure you check that out. And all access gets you access to all the current stuff and all the future stuff. So to the courses. Now, with that being said, how's everybody feeling? How you doing? Let's go ahead and shout out some of the people in the live stream right now. We got Mike Volmer, Alexandra G. Thank you so much for all your help all the time, Alexandra G. Mr. Blake, my daddy-o, Mr. Brad Kellam. We got Brian Mavor, Sawtooth Hiker, Granny's Garden. Granny's Garden, always in the house. A lot of these names I'm reading are always in the house. Thank you so much for being here. Unforgettable name, Victor Lopez, Jack Destiny. It is your destiny. It is my destiny to succeed in this market. And that's what we are here for, right? Throw one in chat if you've had a small taste of success, but you can't make it consistent. All of us have been plagued with that at some point in our lives. And usually when we start new things, we see other people in the space that we're foraying into somehow doing it so much better than us, but we forget they may have years of experience. Well, we can sort of shortcut that if we want to, if we learn from others and not make the same mistakes they did. And that's what the purpose of this channel is. So you don't make some of the same dumb decisions I made early on. You know, don't trade up to 100 grand and then lose 70,000 in 2 trades. Don't make those errors. All traders make errors. The goal is, what's the quickest route? What's your path? What's your strategy to get back on a winning and successful action plan as soon as possible when you do fall off that horse? Learn from your mistakes. That's what this is all about. Now, unforgettable name, how you doing? Jason Mack, Crimson Caravan Company, Justin Eubanks, Mac, let's see who else we got in here. MK, I am George number 2. There's a lot of Georges in here, right? Zeus Cash, Matt C, how you doing? Did you decide if you're going to Bitcoin Miami? If you're going to Bitcoin Miami, put MIA in the comment thread right here. Let me know. I'd love to do a meetup with any of you that are there. We can meet up while we are at the Bitcoin conference. That would be awesome. B2.0, Crypto Kid, Tazdeen, who else we got here? Cade Pulliam. Now let's go ahead. First off, say thank you so much, everybody, for being here. If you have not yet, we're just getting this started. We're going to be breaking down a lot of charts today. Hit that like button, hit that subscribe button, and ding that bell. Now, let's talk about what we got to talk about today, right? So we're going to go through a couple of the charts early on, and we're going to be breaking down a lot of TA and strategy. Yes, it's going to be relevant to the price action today. But again, if you're watching at any point in the future, we are going to be talking about, setting up for different outcomes, looking at price action and what it may be signaling and what the actual momentum is saying, and then tying that into our indicators so we can derive good analysis that can give us highly probabilistic trades that basically can drive our consistency of profitability. That's what this is all about. Do you want to be profitable in this market? Throw a 1 in chat if it's a hell yes, you want to be profitable. Put a 2 in chat if you just want to come in here and donate all your money to other people that are better traders. I very much doubt there's going to be very many 2s. And if there are any 2s in there, it's going to be people that are just pulling a leg, because we all want to be profitable, right? So let's go ahead and break this down. We're going to talk a little bit because this is, we got to talk a little bit about what's going on today. And again, this is relevant to any time period. Now, yesterday we had this sort of nuke moment. If we come here, let's look at the 1 hour chart so we can get a good view on this. Hit the auto button. And before we get into this, I do want to say something. You've all seen me, I don't want to say struggle with this, but get very frustrated with this. And that is when I have this darn paintbrush tool on, and then I want to go move the chart and I end up, with these accidental drawings. I want to show you something that you can do to immediately get back to this cursor that's up here on the top so you can get off of this paintbrush. all you have to do is right click and then you immediately go back to Paintbrush. Did you see that? If I go to Paintbrush down here, I don't know if you can see it there. Let me go just like this. If I go to Paintbrush right here, if I continue doing it, it'll just be Paintbrush. If the second I right click, the paintbrush is off. So that should hopefully save a lot of you some of the frustration I've had over the years. Now, coming back on here, now what we want to do is we want to look yesterday at this massive sort of nuke in price action. Just everybody, got back above this trend line. Price action just fell. Everybody's speculating. We all, for some reason, it's in human nature, we want to know why it happened. It could be effective in your analysis going forward in historical understanding of why markets are doing what they're doing. But in reality, even if we never looked at the news, we could still trade incredibly effectively. I mean, Jesse Olson, an incredible trader, a friend of mine, have him on my Twitter spaces regularly. By the way, if you are not following me, make sure you come and follow me, because this evening, I don't know why I don't ever call it out here on the stream. This evening, I will be doing my the weekly Twitter Spaces podcast. It's also released on iHeartRadio, Apple Music, Spotify. It's called Crypto Answered, and you can see here's a little flyer for it up here. We're the longest running crypto podcast Spaces through Twitter. We record it through Twitter Spaces, then release it on other spots. But we've got Jordan Lindsay, MDX Crypto. I think some of the investor bros are going to be on there, and it is at 6 p.m. this evening. I will be doing a tweet about it as soon as we wrap this live stream. So make sure you tune in tonight, 6 p.m. Eastern, Twitter Spaces through my account here. Just come and give me a follow. Now, I was talking about the price action falling, and we want to know exactly what happened. U.S. government. I even told my dad. He messaged me yesterday. What the hell just happened to the price? I said maybe, and I hadn't even looked at any of the data. I said maybe this is my bias, right? Maybe the U.S. government did a fat finger and just trying to dump the market. Well, ironically enough, that's not what happened, but there was data that did support that did cause people to, whether it was actual individual people selling, or if it's some of the many algorithmic traders out there that have different alerts set that automatically trigger buys and sells. So what we have noticed is Bitcoin was not subject to U.S. government selling this week. So this proved to be false. Now, we've seen this twice in the last month or so. There was essentially an on-chain analytics, Bitcoin analytics provider called Arbitrum. I think it's called either Arbitrum or Arkham. I can't remember. It's an R or something, but it's a widely recognized on-chain analysis provider that had they had manually tagged certain addresses as being from the Silk Road or other government seized assets. And so because it was basically tagged in error, when the tokens moved from that wallet address, it basically caused fear that U.S. government was about to dump some more of the crypto holdings that they have. And they have something like 200,000+ Bitcoin from all the assets that they've seized over the years. Now, we could see here Bitcoin was not subject to U.S. government selling this week. Analysis shows, but Bitcoin price action remains pressured. So if we scroll down here, I actually have it already pulled up. It's actually, where did it go? Where did it go? Oh, it's over here. This is it right here. U.S. government balance from our boy Will Clemente. And again, if you have not watched that video that we have on BitBoy Crypto, I did about an hour-long interview with Will Clemente last week. It was a Saturday episode. If you go to BitBoy Crypto, go to videos, you'll see it in one of the thumbnails. It's me and Will on the thumbnail. But you can see right here, there's no real basically pressure from government selling. There's a little bit of reduction here, but this is markedly small. So if we come back over here to the article. Let's see. Bitcoin struggles to recover from fresh losses on May 11 as a false alarm over United States government sales spooked markets. So whether or not things are true or not true, if there's FUD, if there's even positive news, markets can move on this speculation of what people think other people are going to do. That's essentially what you're trying to capture when you are trading. Now, this is important because regardless of where we're at in the cycle, whether you're watching this today, May 11th, 2023, or you're watching this in the future, this is the motif. This is an important consideration when you're making any sort of investment or trade decisions. It's that markets move based on where they think other people are going to be placing their assets or basically accumulating or distributing. This is why when you see big news on an asset like the Ethereum unlock or Hydra on Cardano, which we will be talking about a little bit today, we'll go into that in a second. When you see big news on any asset that is scheduled news, people know about an upgrade or a change or an acquisition or a merger, you can see price pump into that point because people are banking on the idea of, as more and more people become aware of this news, people are going to, less experienced investors are going to think this is going to explode the price. And so they get involved with that only to see after the news, you get the sell off. So buy the rumor, sell the news. This is where that phrase comes from. Now, in this case, this was not only a rumor, this was just basically false data. What's the word I'm looking for? Falsely categorized data that spooked the market and therefore it caused a sell-off, and that starts triggering into sort of cascading price action to the downside. So we need to be able to understand not only what the context of the news is around that daily volatile price action on any asset, but also what does the price action itself tell us? And are there any signals that we can utilize to identify shifts in trend? Now, there's going to be a couple key differences in terms of what we're using in tools when we're trying to identify market reversals and also when we're setting targets. And that's primarily going to be the focus of today. The last bit of the show, we'll do quite a bit of TA on, price action of different stuff. But I want to make sure everybody is getting involved in this stream, hitting that like button, hitting that subscribe button, dinging that bell so we can move on forward. We got 159 people in here, 59 likes. Let's go ahead and drive these up. We only got 59 likes. Come on, everybody. Let's get involved. I'm waking up early for you. Come on. Now, so let's talk about it a little bit more. I'm going to go through these tabs quite quickly. And we're going to talk about what's going on here. So now, I don't know why this one is even up. So first things first, this should be cause for not concern, but awareness in terms of what's happening with the banking sector. JP Morgan CEO Jamie Dimon said he thinks U.S. regulators should look into short selling ban on banks. Now, this should be concerning for anybody because in terms of the traditional finance ecosystem, because he would not say this unless he had some awareness about the contagion that very likely could spread to more regional banks and have more cascading failures in the banking system. Now, this may bode incredibly well. Now, it should absolutely bode well for Bitcoin. It should. You have to remember the word I'm using there. It should bode very well for Bitcoin, but will it? We need to be aware of the market dynamics at play and what's happening, especially as it relates to liquidity in the system. So if he's saying that he thinks the U.S. regulators should look into a short selling ban on banks, does he have, the data, which I know he does? This is what they do for a living, is analyze, basically get as many analytical data points as possible so that they can navigate the market. And they're the largest part of the banking market that we know of, JP Morgan, right? So I'm sure he's got some data that we're not looking at. Now, I think this is, in the long run, incredibly good for Bitcoin that banks are struggling as they are, and Bitcoin is being relatively quite resilient. Now, looking on further here, we can see that as this is the same thing is happening, we can see the difference between Bitcoin and the banks is that banks need your money in them to continue operating. They make money off of you. If your money's not in the bank, they cease to exist, okay? Bitcoin, on the other hand, performs best when you hold your own Bitcoin and don't put it into the centralized, similar to banks but different, the centralized exchanges, regardless of Coinbase, Binance, Gemini, Kraken, KuCoin, and I'm not knocking any of those exchanges, but you have to be aware those are centralized exchanges. But you see, when we get basically the lowest Bitcoin supply on exchange since 2017, this is in Bitcoin, the opposite of banks. It shows that Bitcoin and the maturity of Bitcoin is growing as people hold less of their coins in somebody else's custody. You're holding it yourself. Think about that antithetical sort of situation. Bitcoin is better when you hold it yourself. Banks are worse off if you hold your money yourself. Now let's talk about a Ponzi scheme there. Banks, traditional finance, government wants your money so that they can make money off your back, whereas Bitcoin wants you to hold your money and hold your capital because it's better off if you do. Think about that. Now, again, this might be relevant to today, May 11th, but this is relevant to always. And again, if you're still watching and you're watching this at a later point, you need to understand these talking points. Wonder why Gala is being removed from Coinbase. Gala is being removed from Coinbase because, this is from my dad, Gala is being removed from Coinbase because they have a version 2 upgrade. And I think they're also under a little bit of heightened scrutiny as they have this huge sort of PR campaign trying to bring the SEC to bear to actually answer some of the questions that they haven't answered and make some goddamn, some regulation on stuff that is transparent that people understand. You know, you can't regulate against something that happened 3 years ago that you have no guidance on when people have been asking you for guidance. Now, that's just that. But now let's continue on. There was another thing I wanted to show you, and I think I just, I think it was, let's actually go here. Let's go to Sherman. I want you all to be aware of this. I think I just closed that tab a second. It's this one right here. Now, I'm going to make this large. If you have not seen this, then you absolutely need to see this. And let me make sure. Let's go ahead and turn this up. This is the difference between Bitcoin and the digital ecosystem and banks. Tell me if you spot the difference here in the way they're positioning themselves.
Crypto bros make money literally by making money, and they've made over $1 trillion out of thin air. They'll accuse the U.S. government of making money out of thin air. Maybe we do, but we're the U.S. government.
Talk about a scam. That is, oh my God, Mr. Sherman, he just called himself out. Well, maybe we do print money out of thin air, but we're the U.S. government. And we're setting ourselves up to be at like Argentina because we have no fiscal policy that makes any sense. Do you realize that we had I don't remember what the exact data is. Let's pull it up right here. U.S. debt chart. Let's look at this. Let's go ahead and look at this. 2023 U.S. debt visualized. Holy moly. Just to give us some sort of understanding of the size of money. Visualizing U.S. debt in $1 bills. Okay, we've got, this is 10,000. This is 100,000. Well, here's 1,000, 10,000, 100,000. Here's a million. Look at 10 million. This is a billion. And you can see each one of these walls is $100,000, 100, 100, 100, 100. Now, each one of these is this. And look at this. And then look at a billion. Look at a trillion. Do you see how much money this is? And we have not 1 trillion. We've got 31.4 trillion. Do you see this? This is just ridiculous. And there was a chart here that I saw before. Let's go ahead and pull that up. It's funny, the treasury.gov has a info guide on what national debt is. If they had any idea what it was, maybe we'd have a better here we go. This is what I'm looking for. Do you see this? This is U.S. national debt over the last 100 years. Now, in 2002, I graduated high school in 2002. We can see we had 9.7 trillion. So from 2002 until, let me go ahead and make sure the volume's off on that chart. From 2002 until where we are at today. 30, look at this. This is more than a 3x in national debt in the same time. It's just completely unfathomable what's going on here. Now, but I want to get back on track here and get back over to what we're talking about with the reversals. And let's see. So we are at the lowest Bitcoin supply on exchange since 2017. This is incredible. Now, if we pull this up on Looknode, Looknode has quite a bit of free charts on here. These T1 charts are all free. So check them out if you have not yet. What are we looking at? Net exchange. Actually, I want to come over here to Glassnode. Let's see. Charts. Go to favorites. Exchange balance. We can see right here that we are the percent balance on exchange. We're only sitting at about 12% of supply is on exchange. Now, if we look at exchange balance and the total number, we can see that, I mean, this is incredible. Now, if we look at net, where's net change, net position change? We can see that the flow off of exchange is dominating throughout this period, and we are setting up for an incredible cycle coming up. We're setting up for this incredible cycle. Now, when we're talking about reversals and targets, which is the main impact of today's show, I want to just highlight the fact that we can look at exchange flows, especially as they relate to market cycle lows and market cycle bottoms. But before we get into exchange flows, I want to come over here to lookintoBitcoin.com, which is right here. And we can see, because I want to highlight some free tools for you all so we can identify the macro reversals, and then we're going to come down to the smaller time frames and identify the smaller time frame reversals so that we can be in position. Now, throw a one in chat if throw a one in chat if you're learning something today. Throw a two in chat if you're here only for TA. And just know, if you're here only for TA, in order to really understand TA, you've got to understand the behavior of different cohorts in the market, which is why I love to tie together on-chain data with technical analysis, because the on-chain data gives us a broader view of what different cohorts of trader and investor in the market are doing. The long-term holders, short-term holders, strong hands, weak hands, big wallets, small wallets, where money is flowing or where capital is flowing. And so this is what we want to break down so that when we do get into the price action of a chart, we can really understand with better confidence and understanding what's going on. So we can analyze individual candlesticks, but those individual candlesticks are going to be a lot more informative if we also understand the underlying dynamics of what the market and the sentiment as the market is, not just from fear and greed, but also what the data is signaling to us about what is happening on chain, what is happening with these different types of trader, because it will give us incredible signal as to the context and flow of capital to gives us leading sort of setups of what's going on. Now, first off, we're going to talk about the macro, and then we're going to jump into a bunch of the macro and a bunch of the local stuff. So when we're trying to identify trend cycle tops, let's do that first, because we want to make sure, I want to make sure before we talk about identifying bottoms that we know that we frame it first with how we know how to take profits in an ecosystem. Now, Bitcoin is the bellwether. Essentially, it's the strongest signal we have for the health of the digital asset ecosystem. So if we look at the on-chain data for Bitcoin, even if you're interested in buying Gala or AVAX or Ethereum, as it stands right now, Bitcoin is still sort of the penultimate signal as to, is there a risk on or risk off behavior within the space? Shout out to my boy Crypto Vet. Again, Crypto Vet and I, as well as Jordan Lindsay, MDX Crypto, some of the investor bros. We're going to be doing the spaces tonight. We're going to be trying to do it every Thursday here going out. I've had a pretty wild schedule. Tonight we're doing it at 6 p.m. Eastern time, so check that out. Basically, make sure you're following me on Twitter to make that happen. That's me right here. You can follow me at Kelly Kellam. Boom. Give me that follow, and you'll be able to find it. I'll be posting the link for that as soon as this is over. Now, I like using this metric. Look into Bitcoin.com. You can come up here to charts. Come over here to value days destroyed. This is essentially a variation, and we break all this down in the on-chain data course. in the new BitLab Academy. There's, I think, 20 different charts, and there's going to be growing, that I break down how to understand what's going on in the market. Now, identifying trend cycle tops, we can see very clearly when this is spiking very high, this is showing essentially that we can also see a shift in behavior as the market is maturing. Right here, the spikes are happening basically at or post cycle top. Now we're getting a little bit of a leading indicator as people are becoming more aware of these market cycles. But what this is, value days destroyed. If you don't know what it is on very immediately, which there's no reason you should, scroll down, bam. You got it very eloquently described here. This is a free site, look into bitcoin.com. But essentially what this is doing is taking the coin days, and which is a variation on the coin days destroyed, meaning if you buy a Bitcoin and you hold it for 100 days, that's 100 coin days, okay? Now, when you sell, that means you are destroying those 100 days held, and that coin, once it's transacted to somebody else, is now starting over coin days being held. So what you're seeing is you're seeing this, you're seeing when you're having these large spikes, you're seeing larger amount of coin days being destroyed, meaning you're having a larger amount of coins that have been held from a lower point, and maybe even much older coins, a lot more coin days being destroyed. So you're seeing stronger hands basically distributing or reducing their supply, or AKA selling, taking profits at the strength of the trend. So it's a very strong trend took profits, very strong trend took profits. And we can see here, some of the people missed the boat in previous cycles. So people are getting a little more accustomed to hedging their bets a little bit and taking some profits before the top. And we can see this signaled right here that we should have been really not only, and I failed at this. A lot of people failed at this last cycle, but I will not fail at this cycle. I ended up having to, play this. I played this, think I was waiting for that 100K, but then I basically got out somewhere in this 40 to 50 range. I started reducing my supply. But this was a great example, understanding where the 4-year cycle was, but also, look, smart money's getting out, a lot of value days being destroyed, longer term held coins being destroyed, meaning selling. And then we also have this rounding top, which indicated likely top of the market. Also looking at where we're at within the 4-year cycle, this was a very clear signal. Now, if we come over here to, we can actually just come right back up here to charts. I want you to look, first off, we can also see when this falls and this gets down to the green, very small amount of value days being destroyed. I would not use this to identify an exact bottom, because we can see this is all the way from here all the way to here. But this does signal that smart money is not selling anymore. So we can look to another chart. Now we can come over here to MVRV Z-score, market value to realized value, the standard deviations of how far price is above or below, above or below the realized price being the average of every coin in circulation the last time it moved. What was the price the last time it moved? This is why it's called realized value, because that price was realized when it was sold last. Now, this is always going to be below, in any sort of bull trend, this will always be below the price. When we're in a bear trend, specifically near the end of a bear trend, we will see the price actually go below the realized value. At least we've seen this historically. Maybe this will change in the future as more coins and institutions come in and hold long term. But as it stands right now, this has been an excellent signal for lows and highs. Now, on a basic level, what you can see, and I break this down in more detail on the on-chain data course in BitLab Academy, which you can see right here, bam, right here. What we can see here is anytime this spikes up into this red zone, and maybe this will change over time, but as we can see, when we get these sharp spikes, this is showing that it's basically overheated, meaning this is a separation of the price from the realized price, the actual speculative traded price on exchange versus the average price of every coin the last time it moved. And when we get this large spikes, you start to de-risk your portfolio. We already saw with the value days destroyed, which was right here, that smart money was selling. So this is also reinforcing that we're getting overheated. Now, on the lows, when you're trying to identify lows, meaning likely bottoms, we see the MVRVZ score coming way down here below the, is it the one line? Yeah, it's basically not only below the one line, which is about right here, but down here in these in this green bar that we have right here. And many of these sites, all these the on-chain data metrics from different sites looks fairly different, but we can identify in the future, if you did miss the bottom, start utilizing not only the price action. If you're scared just looking at price, remember, data is your friend. Price can drive your emotions. Look at the data, the fundamental data that we can utilize to give quantitative sort of analytical points. So we're not held hostage by our emotions because we're like, but if I buy here and it drops further. Well, first off, if you see the MVRV score way down here in this green zone, and it does drop further, you still know that you're probably likely near a trend cycle low. Now, another chart we can utilize is coming over here to the RHODL, RHODL, where's it at? Is this it? No. This is not it. It might not be on that one. We're here to RHODL. This is a metric that weighs the difference of the difference. And even if you can't find these on any of the sites, when you're perusing crypto Twitter, it's important that you understand how these charts work, because I post this stuff, Will Clemente posts this stuff, Plan C, there's a bunch of different people and they'll identify different things. But by understanding these charts, and also look into bitcoin.com or Check on Chain or Glassnode or CryptoQuant or looknode.com, any of these sites, understanding what these metrics mean. This is showing basically an oscillator between when short-term holders are dominating how many coins are being held, or long-term holders are dominating how many coins are being held. This is essentially what you're looking at. Scrolling down, we can actually see this. The realized HODL ratio is used to track the difference, to track the relationship between realized value of Bitcoin moved in the last week, realized value of basically 1 to years hold, and the 1 week to 2 week hold. We can also see this right here. Where's my R HODL? Right here. Some of these, I think this one has a better description. The ratio basically of the 1 week held and the 1 to 2 years hold. So when you have dominant 1 week held, meaning a lot of coins are being transacted, and so the people that were holding long are selling to short-term holders, this spikes up here. When you have a lot of short-term holders, you're getting weakness in the market. When you have a lot of long-term holders and very few short-term holders, meaning the assets being held, the capital being held is being dominated by longer-term held coins, you get this dropping down into the green. And we're seeing this is identifying likely trend cycle lows. Look at this. We thought this was a low right here, and then we had the FTX collapse, and then we got that lower low. So even if you bought here, you see this is getting deeper into strength in the chain. If you bought here, you don't capitulate here. You add to your position when this drops down, and this gives you a stronger position. Then you broke up essentially like a small time frame DCA strategy. Thought it was a low. Okay, you don't capitulate here and then wait for it to go back up and buy again. If you bought here and you were confident, then when this drops again and you get a stronger read on the RHODL, the realized HODL ratio, then you reallocate to your position and you basically lower the average price of your entry. This is how you can utilize this. Now, let's see. There's something else. So the NUPL, net unrealized profit and loss. We can see this is the how much coins are being held in profit or at a loss. And we can see when this spikes up in here, this didn't quite get to the blue. Maybe this is diminishing returns, but we can see this, that when this is getting very high, this means everybody's in profit, and everybody's making profit. Then there's going to be some smart money that's going to start cascading, taking profits. And we can see this clearly in the next chart I'm going to show you. And when everybody's in a loss, and this means that they're holding their assets under the average price of what they bought at, this is signaling that's likely a good time to start allocating to buy. Everybody's in profit means price is likely about to reverse. Everybody in loss, or a larger percentage when this is dipping into red, larger percentage of people in loss, good signal to buy. Now, another thing before we dive into all these charts, hit that like button, by the way, hit that subscribe button, ding that bell. Let us know how you're feeling. We're about to jump into a bunch of TA. We're going to look at how to spot reversals in price action, but I wanted to give you some context as to what's going on the macro, because it's always important to look at that macro, midterm, and then micro. So I just want to give you all the tools possible. Now, another thing we can look at here is percent supply and profit. You see, if we're getting up here above 90%, it can hold for a while. But once it starts triggering up here, then you look to your other signals. You look to your technical analysis. You look to other MVRV score. You use multiple signals, because some will lead others. And then when all of them are flashing that things are looking a little overheated, then you can get out. Now, I do want to show you, where was it? This right here, my own on-chain metric. Come here to looknode.com, market valuation, cycle valuation. Come down here to Bitcoin trend Fibonacci opportunity zones. We can see each time this gets up here into this above, we can see we have a take profit zone, overheated hype cycle, which is this yellow. If we zoom in on this just a little bit, we can see this. See, once we broke this overheated zone, which is right here, once we broke this, we knew this was clear take profit. We're tapping it, but we broke it right here. And then we got all the way up and almost tapped this extreme hype. So we're between these two zones, clear take profit area. We did this again right here, broke above it, came back into it, came back into the zone, and we started rounding out. And then we didn't even quite get into it on this second one, but we can see excellent signal once we get above this take profit zone. And this is a free chart. If you come to, I'll put this in the, you guys can utilize this at your own accord right there. Favorite it, use it, share it on your Twitter, let people know. This is based on the realized price. Every one of these bands is a fib multiple of the realized price. And then in addition to that, I also have the long-term holder realized price and short-term holder realized price within it, just because they're great trend signal bars. And we can see if we turn off everything else before we get into the TA, which we're about to get into, if we look at this, anytime, where is it? Capitulation hope zone. Anytime price actually fully breaks through the short-term holder realized price, which is this one right here, it's this line right here. We see when we break through this, we want to look for that retest. And this would, if you missed all the other signals, you look for this retest of short-term holder realized price and you get out. Same thing happened right here. If you miss this, you could have gotten out here. Maybe you would have missed this, but you would have saved yourself the trouble of all of this. If this went back up, when this came back out, you can see right here, this did come back up and test this almost immediately. You could have gotten out just on this retest at $47,000. You don't have to get the exact top and the exact bottom. If you don't have the time to sit there and stare at the charts, that's okay. But we can utilize these things. And then similarly, we can see with these, let's go bull capitulation. And no, it's not what I want to do. We can see on these bands, identifying lows, this came all the way down to this bear exhaustion buy zone, which is this one right here. See that? Once we get down to this zone, if we're getting in this region, we need to really think about maybe allocating to our portfolios. So the last thing I wanted to show you was a great signal, large institutional money. What a signal this was. How do most of us miss this? Addresses over 10,000. Look where they started taking out. This is reducing supply, selling. And this is all smaller wallets, less conviction, less skill, less understanding of trading data rather than emotions. And now there's no strength in the market because this is all short-term holders, as we saw on the RHODL, as well as MVRV. We're seeing that there's a lot of short-term holders that were accumulating here, while long-term holders sold. What do I mean by that? Long-term holder, here we go. Long-term holder supply. No, that's not what I want to look at. Long-term holder. Go. So you see long-term holders right in here selling into the strength. This is what this red is. They're reducing their supply, aka they're selling. And if they're selling, then that means that those coins, for the most part, are transitioning into short-term holder hands. And also they're immediately going to become coins less than 155 days. And what happens there? We can see right here, short-term holders, look, buying right here into this, showing weakness. Now, where we're at right now, and we've talked about this, look at this, short-term holders right here, reducing supply. They're scared. But this is giving me actually a lot of bullish I don't want to call it hope, but it's giving me some bullish signal here because we see long-term holder position change. Look at this. Long-term holders are buying the living hell out of this little dip right here. So is something coming? Well, all we can do is wait and see. We see also right here, long-term holders buying this dip, giving strength. Now, what can we do with the TA for if you're looking at price action and maybe you've already looked at the macro and you're trying to identify on smaller timeframes right now, today, May 11th, or any time in the future? What can we do to identify when we are trading, whether you're a smaller term swing trader, scalp trader, day trader, any of those things? How do we identify when we're seeing FUD or we see no news at all? We're just looking at the price action, and maybe you have zero indicators whatsoever, and you just want to look at the price action and say, okay, what do I do? That's what this is about. If you want to know, if you want me to break that down, throw a 1 in chat. Comment down below if you have any questions. If you're watching this any other time, and again, if you're watching on any of the other channels that we do have this broadcast on, make sure you come over to youtube.com/@BitLab Academy. We're pushing up. Let's see where we're at. 6,920-ish. Followers. We're almost at 7,000. Come give us a follow. Hit that like button. And again, this is going to be this is going to be added to, if you come over here to playlists and come to view full playlists, I've got some really great content in here that we've done, some with other guests as well, basically breaking down things that are meant to be evergreen. This pro trading view guide is going to be wonderful. This current stream today, spotting reversal, setting targets, is going to be in this playlist as well. You can find this right here, the daily alpha playlist on bitlabacademy.com. On youtube.com/@BitLab Academy. Now let's break down the price action. Now, I do want to say before we do that, Cardano, and I'm working on a guest right now to talk deeper about this, but Cardano is seeing some strong fundamental growth right now because they did just have the, where is it at? Hydra scaling solution. This is going to be huge, especially as we're seeing a lot of gas fees just go astronomical on Ethereum right now with all the meme coin sort of volume that's happening is driving up how much GUI it takes, which is the gas fee. That's why some people are doing $100 transactions on, you know, some of the dexes and getting $50 transaction fees. Well, one of the nice things about Cardano is they have Hydra that is just released into their mainnet. It's going to basically scale up to 1 million transactions per second. And as more people use the network and more basically, I forget if they're called nodes or heads. I forget, but as new, essentially like nodes or heads, individual sort of Hydra points scale up, you can basically scale the transactions as more people, because these basically break out the transactions, package them individually, basically. So not one central unit is processing all of it. So essentially we'll have an infinite number of transactions per second, meaning that if you have, you understand what I'm saying. Basically, it's going to be 1 million transactions per second per head. I don't know why my brain's not working right now. I forget what it's called. I just read so much this morning. It's however they hinted. You understand. It's not going to be a hard fork, but it's going to be helping scaling and throughput and also keeping fees low for trading. So there's my brain fart for the day. Throw a 1 in chat if you ever have brain farts. Now let's see what this poll said before we break into this. TA. Okay, we got 61% say we need to retest 25K and it's needed now. FUD pullback and up from here, 38%. Well, we're going to look into that. Now we do see some whales are buying Bitcoin right now. Sorry, Cardano right now, which is going to be very nice. We're seeing a little bit of an uptick, and we can see right here. This is it's very hard to see, but this price is this green line is Bitcoin price. This yellow line, which I'm tracing right here, is starting to trend up right here. So the whale cohorts are starting to buy a little bit of Bitcoin of Cardano. Now, if we also see right here, we can also see whales are starting to buy, basically buying Bitcoin. And what do they know that we don't? Well, we see this blue tick right here. This is whales buying. So this is some of the data that sets up what we're looking at when we're trying to identify reversals. So let's say we've looked at all this and now we're looking at price action. Here we go. We do look like we're getting a little bit of a drop here. So that's okay. We can utilize our skills to understand what's happening. Let's see. Matt C, question, do you use OBV? Why not? I absolutely do use OBV. We actually integrated also with the BitLab trading stack, which is right here. We can see if I put this on full, it is on full. Okay, let me put it on By the way, anybody that has the BitLab trading stack, if you double click on these flags or hit this window here, you can change your settings. If you want them to be like mine, it's 7490 is what I like to use. And you can also show only last divergence or turn this off, and you'll see that you get them all over the chart like this if you want to see each one of them. But OBV, let's see this is OBV, on balance volume. Volume is one of the best, and this is great to pivot for what we're talking about with reversals. Volume is one of the leading things you want to look at when you're looking for pivots, when there's either a massive decrease in volume going into a direction, or a massive volume that, like, as prices falling and volume's dropping, but then you come to a key level, for instance, like right here, and all of a sudden you get this large spike in volume right here that's supporting this zone. Then, by the way, Matt C said that was from Indie Rock Crypto. So shout out Indie Rock Crypto. Let me know. I'm having trouble looking at, because I'm going through so much today. If there's any super chats, mods, please let me know. I will definitely 100% make sure to hit those. There's only so much one man can do. I am going to make sure the last 10 minutes of the stream, I am going to try and, if there's any questions, definitely throw them in there. If anybody has any QA about anything regarding crypto, coins, BitLab Academy, the new BitLab Academy functionality, anything, throw that in there. I'll try to make a point to do some Q&A at the end. And if there's any super chats, I'll make sure to hit every single one of those, because I do want to appreciate anybody calling those out. Now, volume is incredibly important because it shows lack of interest in a direction, and then a specific interest at a specific area when price coming into it. So what we want to do first, before we get into all the signals and all the indicators, I want to just, we can actually remove all indicators, and we can look at this just in price action alone. Now we can actually turn off all the drawings. And what I want to do here is I'm going to come on the 4-hour chart, and this, I want you to notice that you can use this skill, you can use this strategy with any time frame. And I do recommend coming into at least starting with at least a daily, if not a larger time frame. But let's go ahead and start with the 3-day. And what I want you to notice is we have all these broken down in candles, candle patterns that then we parlay into indicators. Because if you're not understanding how to read price action, then you're doing yourself a huge, huge disservice. It is hot in here. I got to turn on this fan on my hips. All right, everybody, health check. You got to wiggle your back. We're all hunched over looking at the screens here. All right. What did I miss in chat in the last 45? All right, we're going to start over from scratch, everybody, just for unforgettable name. I'm totally joking. By the way, any of you that, if you do miss something, you can always scroll back to the beginning and call that, check that out. I do appreciate anybody that views, hits that like button, hits that subscribe button. It really drives engagement. We got 234, 127 likes. So what we want to do first, we're going to break down price action, and then we're going to break down indicators that we can put on top of it, both standard indicators like RSI, stochastics, MACD, and then also the BitLab trading stack to really help you understand what's going on. So what we can see here first is, actually, let me do this. Hold on one second. So what we're going to do right now is break down how we can spot reversals in price action using not only the candles, but then we're going to use that to give us our leading indication to understand where price direction, where interest, where momentum is going, just by looking at the price action. And then we're going to move to standard indicators, MACD, RSI, stochastics, and then we're going to follow that up with how to utilize the BitLab trading stack to really get a sniper's view as to what's going on in the market. So first things first is we want to look at price action as it is. Now you can see I have my candle set up to be white for bullish price action, meaning pricing is going up, and I have it gray, and they're outlined in red, but it's gray for price action coming to the downside. Now, what I want you to notice is you can realize and understand the momentum just by looking at what the candles are doing. In this case right here, we can see that this is white for bullish. Let me go ahead and come to another. Let me go to another chart. Okay. In this case right here, we can see white is bullish. and we can see gray is bearish. And what we can see is immediately we have this rounding to the upside. Not only is it rounding to the upside, but we also see an increase in candle size consecutively as this moves up. So this is growing in momentum, which is also how we get that roundingness coming to the upside. In addition to that, with price action in this sort of situation, if we were to zoom out in like this, you know, if we were, then this chart is just specifically to show you what's going on with price action. Ignore all the other lines. I just don't want to erase them because I use it for something else. But we can see this is basically a double bottom sort of formation. We have a downside, downside, and then back up. We have this neckline right here. So just looking at the price action alone, we can see a bearish attempt, bulls recover it. Another bearish attempt, which means this is not following through now. And now we also have a higher low. And so therefore we could have used price action alone to identify that maybe this is a move we could take. Conservatively, we have this neckline right here, meaning this is a previous high. Once this breaks through this, you could have taken just a conservative trade or a conservative look at this to see that price action is moving to the upside. Now, we can see the momentum is increasing because the size of the bullish candles, these white candles, your chart might be green. That's okay. I just have this set up to work with the BitLab Trading Stack Indicators, but we can see the momentum is moving to the upside. Now, similarly, when these candles start to sort of, they're getting smaller. See, this is larger, larger. Now this candle right here is smaller than this candle here. So there's already a diminishing of momentum to the upside. In addition to this, we also have candles starting to roll over. And then we get that pullback as we broke this level and came down. So we can use these price action, we can use the price action as a signal to what's going on with price action and momentum and direction and what's happening here. Now, most specifically, when we're trying to spot reversals, I'm going to come down to the daily now. And I want you to notice a couple different candle shapes. We can see that we have these candles right here, which are known as spinning tops, this right here. And we have another one right here directly above. This is a spinning top, meaning we have this candle body. There's just a small body with equal size wicks above and below, which are these essentially these sort of, let's go ahead and we can see right here. We see this wick right here and we see another wick right below it. That's how far price traveled above and then got brought down and then got pushed down by the bears and then got brought back up. So there's an equal narrative between the bulls and the bears. Now, why will we be looking at this in context of potential reversal? Well, we see this large sort of momentum increase right here that immediately starts to roll over, okay? And so this is dominated by the bulls. We get indecision, neutral sort of bullish bear fight. And then we see this, followed by another sort of spinning top. This one right here is also more of a doji, depending on how you look at it. If this candle, if this was squashed down, you'd think it was a doji. Dojis are essentially nearly no body of the candle, which is the fat area of the candle, only wicks, right? So we have increase in momentum of the bulls. It's an attempt by the bears, a smaller increase in a small reduced size of momentum by the bulls, and then we get indecision, and this, so you didn't have to sell the top here, but you could have seen that this was indecision along the way and traded when this broke this sort of trend line that we had formed right here. So you could have traded that breakout to the downside or taken profits if you're just swing trading this move here, taking profits when this reset back down here, and you could have waited just on candlesticks alone for when this, maybe you didn't take profits right here because you weren't ready, maybe you're just looking at candlesticks, but we see this move to the downside, then we get indecision, and then we can look to our other signals that we're going to break down here in a moment for the likely move to the upside. Now, in this case, if you're just using candlesticks alone, we have a sort of high right here that once this broke down and reattempted to come, no candle closure, reattempted to push back above this, but indecision to the downside. Once this candle broke above this, the trade would have been when we broke this. This is a stripped down version without using any confluence, just looking at the candlestick patterns themselves. Now, similarly, where we're at today, where we're at today, this sort of move to the upside, momentum to the upside. Now we're getting indecision. We got a we have a hanging man right here, almost. It looks like a hammer candle, but we have the wick to the downside. This is a potential reversal candle sign. More indecision. Now we get an attempt by the bulls with this large wick. Bear said, no, bulls are trying to basically grab this liquidity. Bears are dominating the narrative, brings it back down, basically shooting star right here. And then we get the breakdown. So these candles are signaling that this reversal is going to take place. Now on the daily, we don't get a clear signal right here as to this breakdown, but I bet if we, I haven't looked, I bet if we come down to the 4 hour, we can see, look at this. This is that reversal right here. We zoom into this. On the 4 hour, this is why it pays if you're trading the daily, get higher resolution by breaking down to the smaller time frames. Special shout out to Matt C, $99 super chat, biggest super chat we've ever got. Thank you, Kelly, Tim, and everyone in the HIT network for helping us navigate the wild world of crypto. We are so much better prepared because of the information you provide. Incredibly grateful. And yes, I will be in Miami next week. First beverage on me. Shout out to Matt C. Thank you so much for the super chat. Biggest one we've gotten yet. And I just appreciate all the love and support. And let's keep it going. Let's keep that information going. So again, special shout out to Matt C. Thank you so much. Daily showed. Oh, where would I have traded that? I didn't have clear signal. Let's get better resolution. Let's come down to the 4 hour. Now we see right here, this was that peak, momentum coming up, basically stair stepping up. On the one hand, we've got immediately a little bit of an increase here in size or momentum, but then immediately we get the spinning top, potential reversal candle. And then if you don't believe that, you get this kind of, not quite a shooting star, but huge bullish attempt that the bears eat back up. So the trade on this would have been breaking this low right here. As soon as that is, you would have captured, just on price action alone, you could have captured, let's say you're going all the way just using candlesticks, you're coming down to somewhere right around here. That's a 6% trade just on spot. If you just not even traded this, sold here and rebought down here. Now, what my point is with all this is indicators are great and they absolutely make things a lot easier to understand in the markets. But first start by understanding the price action on the chart and then use that. So your vision is seeing the potential shifts in momentum that then you can add other things like MACD, RSI, stochastics, and then take it another step further with aggregate indicators like the BitLab Trading Stack, which pulls together about 20 different indicators in a package of 4 indicators so you can really get a deep view on the market. So first thing, let's look at what's happening right here in yesterday's price action. Candlestick alone, the fear, boom, pushed us all the way down to here. We can see this wick. This was the fear, and then, oh, maybe it was an error, bought back up. Now, Piano Matty B sometimes calls out where it wicks, it usually will candlestick, and we can see this sort of playing out right here. So we're going to look to some of the other signals that we can look to as well, because we don't want to just look at price action. We're going to look at price action, and then we can come over here to our support and resistance levels. It's right here, and then we can look to indicators. So in this case, where are we at? Yeah. So in this case, this is that 4 hour area we're talking about where it might likely reverse. We also know that we were in a bearish structure, this rising wedge. So now we understand the chart formation as well as the candle structure. We're forming this rising wedge. And once we get up to here, if we're not sure if it's going to reverse, we're coming up to a level of resistance as well as having an indecision candle, clear signal to take a short right there or to exit position on an aggressive stance. On a more conservative stance, more conservative stances protect your capital and allow you to make more money over time because you're not just jumping in the second you see an indecision candle or the second you get to resistance. But more concerted, conservative area is we know this is likely to break down. We come to this level of support, and once we lose this, that's a clear trade. Now, boom, we're stair stepping down. Okay, so now we're utilizing the candlestick patterns as well as candlestick patterns and momentum as well as support and resistance levels. Okay. Now it's important to understand this because if you're coming down to these indecision candles, this hammer candle right here, followed by a spinning top, you may think this is absolutely going to go up. In this case, it did go up, but in the bearish context of this, you can see this did come up, but it came right into a known level of resistance, which is this line that we've had for a while. It's come into a known level of resistance, And it's in this smaller time frame we're looking at, a downtrend on the smaller 4-hour time frame. So then in this level right here, maybe you didn't trade this, maybe you're still long and you try to take profit, but then this comes back up, gets another rejection check. So we come down to a smaller time frame, 1 hour. Now we can see here, let's sort of zoom in here. We can see here, this is pushing up into it. We get a doji candle. We get basically a bunch of indecision candles right here, and then rejection. So we're utilizing price action and support and resistance levels by trend lines to understand what is happening in the market. Now, where it is right now, let's sort of zoom out. Let's come to the 4-hour. We can see that we are sort of hanging by a moment here with you. You see, this is coming right into this region right here. I won't call it a fairly important region, just on this level from that we've been in for about 50 days. Large sort of, some people want to call it a head and shoulders. It's not quite, doesn't really have the volume profile with it. But it's also, it's going to play out the same way because we have a bullish attempt, a higher bullish attempt brought back by the bears, bullish attempt. And now we're getting more of this descending level right here. And we're holding this zone as it is. We've kind of broken this parabolic trend line, but this is sort of indifferent. But now we can see we've got our levels mapped out directly below us of where we can utilize potential targets to the downside if this does break this. Now, when we come to this chart right here, no, it's this chart right here. Did I delete? Right here. Here we go. Now, we can see this is, I like to draw different charts, different setups, different support and resistances on multiple charts so I can see things in different contexts and make sure that I'm identifying stuff. Now we see right here, I don't have this bar here, but I do have this longer period time frame sort of resistances that we've identified, and we can see that we have lost this, and this is looking like it's setting up for a downtrend. Now I do have 3 different sort of potentialities here that I have mapped out. It's this, in this region coming back up, testing, and then making its way back up just from this move, up on this bullish attempt, or potentially coming down to this zone, this 25.5 zone at minimum, and then bouncing up, or coming down here, getting a relief rally and continuing down. All 3 of these are possible, and I'm not emotionally tied to any of them. My long-term vision of making a lot of money is very hopeful of this actually happening here, because then we get better prices. My more immediate emotionality of what I want price action to do is, of course, go like this and make it exciting and make engagement go through the roof. But we have to plan for all possibilities. And if we do get caught in this dropping, we can't just be upset with the market. It always goes against me. If this drops against the price that you bought, realize now you have opportunity to buy things at a lower price. That's okay. The adoption curve and the fundamental growth of Bitcoin and the digital asset ecosystem is such that I'm okay with price dropping to any level, because I can then take better advantage of what's happening in the future. Now let's go to the price action as it works with traditional indicators, and then we're going to look at the BitLab trading stack, because what I want you to notice is we can utilize the stochastics right here and the RSI and the MACD to understand where momentum is going and if we may likely get a bounce. Now, as we look at this on the daily, we can see, let's actually go back to the other screen that has a little less stuff on it. Okay, here we go. So we can see right here. So what I want you to notice is, is the fact that the stochastics right here on the bottom of the screen, I'm going to take my face off, on the bottom of the screen here, when the stochastics get reset, meaning price pulled back, and the stochastic strength gets reset down to these zones, this is when you're able to really, get these strong moves. And if anything, you can realize that when price action is pulling back, know that the momentum indicators are pulling back, giving you more potential fuel and strength to move up following that move. So this is breaking down. And if this breaks down further, fine, that means the stochastics and the momentum is going to be down here now. But what I do want to show you on the daily is that the RSI, if we kind of put a line here, Option H or Alt H if you're on PC, gives you a horizontal line. We can see that we are kind of not showing a huge amount of, let's look at the 3-day. Okay, this is still holding above the 50 line, which is still inherently bullish for Bitcoin right now. When this starts losing this level, and not just like this with a quick reversal, but if this starts losing this level and the strength, the relative strength index, this is not overbought or oversold. We can sometimes characterize it that way, but this is really showing the strength of the market. When this breaks down into these lower regions and comes back up and gets rejected and comes down, that's going to be signaling market weakness and we're going down. On the 3-day, this is looking like a very excellent setup. Look at this on the MACD at this point when the stochastics fully reset. RSI comes down, resets. MACD is starting to roll over, and look at this when the stochastics reset. What do we get? We got a very strong move afterwards. Now this is starting to reset, and look at this. Stochastics are starting to roll over. MACD is not yet starting to round on the 3-day. On the daily, this is kind of choppy. I can tell without even zooming into it because you can tell by these colors. Dark means it's still expanding, getting this lighter flag here. When these histogram bars get lighter, this means this is starting to contract. So you don't even have to really have this. You can tell just by the color flopping. Expanding bullish, contracting bullish, meaning momentum rolling over. So this is what we're seeing. Now, when we come to the BitLab trading stack, now we can come here. This is the market intelligence, BitLab relative extrema. This is market intelligence is showing us all the reading about 12 different indicators. You're seeing with the market intelligence, you're seeing a lot of the divergences between essentially MACD. Here's all the divergences it reads. On balance volume, check-in money flow, relative strength index, stochastics, momentum, MACD, money flow, as well as showing high and low pivot points. In addition to that, showing an EMA ribbon. And we've got a huge update coming to market intelligence and some of the other indicators as well. As you see, the relative extrema is already updated, but we're seeing these divergences here in combination with the strength of a move within a move, which is what the relative extrema shows. We have this aggregate sort of momentum and healthy movement wave, which is this wave here. This wave here, and when the move is outside of this wave, this is when we know that the move may have a consolidation or sharp pullback relatively soon. And these moves, when they're outside of the wave, turn these candles pink this is unhealthy bullish pressure. Sorry, this is unhealthy bullish movement, likely have consolidation or reversal. So this was signaling this weakness all the way up to this before this reversal. Now, when these bars are to the downside, we get this signaling green on the bars, showing and signifying that this is not very healthy bearish movement. So we're seeing a lot of choppiness in this region. But what I want you to notice is as we came up to this level, people really wanted this to go up. Well, we can see that these signals were pink on the chart, and which means that this move is not very healthy. It's outside of norms. There's not the correct pressures in it to sustain that move to the upside. Now, I would not have taken a short off just the pink candle or off these bars, which this is signaled on the candles now. But when we get up into this zone of resistance on this price action, this candle has been pink leading up into this, and we get a bunch of bearish divergences. That would have been a clear signal to take that profit on this move, or take a short to get out of this move to take advantage of the price to the downside. Now, we can see if we come here to the 4-hour, very similar. We're getting, each time we're pushing up, we get consolidation rollover when we're getting these red moves, these red candles from the relative extrema. Now we can also look to the volume, hidden volume here, where we get, look at this, we got a bearish divergence right here on volume, meaning the volume does not agree with the price action at this point. Coming up, bearish divergence, and we're getting the relative extrema showing unhealthy, and we get a red flag here on the significant movement. The significant movement, again, is an aggregate of a bunch of different momentum indicators when you're showing very overvalued or very undervalued. Red being overvalued, blue being undervalued, aka likely trend cycle top, and meaning the smaller time frame trend cycle top, it may be consolidating or reversal. Likely trend cycle bottom, it may be consolidating or reversing. It's essentially showing when the momentum, an aggregate, a grouping of different momentum indicators like the stochastics and MACD and strength indexes are showing things are overvalued or undervalued. So you use this in confluence right here. Okay, we got a little bit, we get the green candles on the relative extrema, called the reversal, and the price action candles. We see these basically hammer candle, doji candle, another small little hammer candle in conjunction with the relative extrema green candles, showing that this is likely a buy opportunity forming. And it's neutral here, so momentum, nothing's overvalued or undervalued, but these two alone was signaling that it was likely going to move up. It did, and immediately this was unhealthy. Bearish divergence. Let's go ahead and turn on the BitLab Market Intelligence. Okay, turn on all. If you want to show all of the divergences, you have to turn off the show. I like to leave this on so it only keeps my chart clean, but you can turn this off and it shows all the divergences. Look at this. Bearish divergence, unhealthy move, pink candles, and red flash here on the significant movement, clear signal. Now where we're at yesterday when things nuked, let's see, this is yesterday right here. So yes, things nuked about, yeah, right here. Things nuked right here, and we can see on the, if we come down to the 2 hour, look at this. So this move up, we got 3 bearish divergences. We're in a known zone. We got a doji candle, which we can see right here, the spinning top doji right here. This moved up very quickly. Bearish divergence. We got a red flash, overvalued, and I mean this was a clear. We didn't get the relative extrema signal, but we got the other 3 that we were looking for: to known area of resistance, bearish divergences, known area of retracement that we are looking at, as well as a candle itself. So we can utilize a multitude of different things, and you can also flip back over to your standard indicators here, and we can see right here, we already had a contraction of the MACD happening right into this candle. We also had the stochastics coming down sharply. See this? Before this move here. So we can see these things sort of forming before they happen if you use the data and the tools that are available to you. That's the best way to really spot reversals, is to use a confluence of multiple different things, price action being first, support and resistance levels and diagonal trend lines being second. You can use your Fibonacci's, which we've talked about a lot on this channel, on the BitLab Academy channel, which is youtube.com/@BitLab Academy. If you're watching this anywhere else, or if you're watching this video on the BitLab Academy site. But I want you to utilize all the things possible. Now, if you don't have the new relative extrema on your chart yet, if you still show the old one, delete it off your chart, come into the indicators, come back to invite-only scripts, and re-add the relative extrema. It will put it on your chart, and you can move it up like I have mine if you want by doing this. And now it will put the colors on your candles as well. I do recommend coming into your chart settings, turning your bullish candles green and your bearish candles gray. That way the colored candles are only the relative extrema. So you can see a bullish setup is happening. A bullish setup is potentially happening, but we have to use this all in the context of all the other signals that we're looking at. So use the data, not just to price. Find confluence between multiple different data points, price action, support and resistance, and multiple different indicators so that you can make healthy trade decisions. All right. Now we've got about 12 minutes left. We got 258 people in the room right now. I want to shout out everybody. If you have not yet, hit that like button, hit that subscribe button, and ding that bell. And if you have not yet, we got a giveaway we're doing. So make sure you come over to BitLab Academy page right here. Follow us, do a retweet of this tweet, and hit that like button. You're going to be entered to win. I will be drawing tomorrow. This is how you get entered. Retweet, follow, retweet this daily tweet, and like this. You get entered to win. Now let's go ahead and do a bunch of TA. On some coins. We're going to do our Turbo TA section now, brought to you by Endurance, meaning we got to just keep this going, baby. Oh, yeah, shout out. Oh, and shout out to Presend, by the way. If nobody's used presend.io, I started using it, and I saved myself a huge amount of money the other day sending a transaction on the Avalanche chain. And I almost sent it to the wrong address, and Presend sorted me out. Presend itself, that's what it does. It makes sure you're sending things to change the correct chain on a network and to an address that actually exists that you're intending to. So it really saves you a lot of money there. So okay, let's go ahead and do this. We're doing Turbo TA. Now, today we're talking about spotting reversals. And so do I think this is going to reverse? Well, looking at the on-chain data, first off, look at this large spike. Despite the price action going up and getting nuked by FUD, even still, this price action to the upside was already suggesting, see this relative extrema bar? See this pink bar? This was already suggesting this was an unhealthy move before that FUD even came out about the US government selling, which they did not. That was incorrect labeling from Arkham, or I can't remember the name of the data provider. So the technicals were already setting up for a pullback before that data came out anyway. Now, is this going to hold? Well, as it stands right now, we are testing we're testing that narrative of the bulls actually being able to reverse this. This was looking unhealthy to the downside, but this is flipped back gray, meaning this is a healthy move. See this? These bars are within the relative extrema, and there's no blue forming here. We're on the 4 hour. Let's get down. Let's look a smaller time frame. Okay, the blue is starting to form here. We're coming into this local region that is this sort of support region that we're looking at, but there's no bullish divergence on the volume. We did get two of the relative extrema bars right here. That is signifying maybe a little bit of reversal. If this can hold, then we do have, even with the wick, a higher low here. But this is looking questionable at best. So you see this right here? look at all the candles I was just talking about. Each one of these pullback, we get the hammer candle, a lot of indecision candles, and then move up. Pullback, hammer candle up, hanging man candle down. Same candles, doji candle up. So we can utilize this. It's not going to happen every time, but we utilize this in conjunction with all our other stuff. Now, with Bitcoin on the 24-minute chart, look at this large candle to the downside, eaten back up. They are trying to push this down. They really are. But this is starting to look a little bit like a falling channel. In which case this would be somewhat of a bullish setup. Now, this is only on the 24-minute chart, but if this is able to kind of rally back up and get back up to this level, I'd be more confident this is a falling channel and this is a bullish formation. Rising wedges and rising channels tend to break out bearish. Falling wedges and falling channels tend to break out bullish. It's a just easy thing to remember. If it's pointing down, it tends to break out of. If it's pointing up, it tends to break out down. So this is looking like it wants to reverse. Do I think it's going to? I think things are kind of very finicky right now with everything. So I would just trade this. I would trade this very, if you're actively trading smaller timeframes, I would trade this very conservatively. I would wait for, what is this move right here? Let's see. That's only about a 1.23% move. I would want, based on the mesopic vision indicator, which we will be adding to our area very soon, we can see that once this comes back up into this region, not only does it need to break out of this, we've got this sort of resistance level above us, which is this sort of volume block area right here. There's basically just an error, not an error, anomaly in liquidity and buying and selling volume in this order block right here, which price has already revisited once, twice. When we get back up here, this is where I'm going to be looking right here. This is a 27.6 to 27.65 zone. But we also have this level right here. So that's with Bitcoin. Let's go ahead and run through a bunch of other coins now. Cardano, we can see the levels. Let's go ahead and turn off mesopic vision. We look at this. This came right back up into this red volume block that's part of the mesopic vision. Came right back into this, rejected. Now, if we turn this off and we look just at the price action, we came down to these zones. Remember, I had these zones marked out like 2-3 weeks ago. We are in a bit of a falling wedge here. Now, this is attempting to break out bearishly. You see this? Now we are on a 1 hour, and look at this. These wicks are just falling through this, but the candle body closures are still within it. This is a 1 hour. I'm sure if we look at the 4 hour, yeah, if we look at the 24 minute, 24. So look at this, fell down before. We got this bulls, bears, equal size wicks, indecision on the way down, which signals a likely reversal back up. I hope this does not get rejected here at this sort of trend line and then down, but we're seeing that the trend cycle low on this smaller turn time frame. This is a 24 minute. Let's go back to the 1 hour. This is flashing blue. We can see each time this flashes blue, there's these sort of bounce zones. and the relative extrema is flashing green, meaning a buy opportunity. See this right here on the bottom? I'm pointing right here where my mouse is. This is showing this is a potentially bullish setup. Although price is falling, this flashed green because the health of this candle to the downside is not supported for likely further downside. Of course, we see right here, we had this all the way through, but we didn't have any of the other signals to support that. That's why you need confluence. There's no real pressure to explain this downside move, but there's likely some liquidations and other stuff, but we could expect at some point a likely reversal. And we see this continue down, but then now we're getting this reversal potential right here. What I'd like to see is a bullish divergence, which are these right here on the hidden volume, right here on Cardano, to likely move back to the upside. Because if this were to happen, this would put a move just up to the top side of this range, this falling wedge, just 6% from there. And then, I think once Cardano gets going, it's going to be moving. Now, if this does lose, let's go back out to the 4 hour. If this does lose, let's break this down. This does lose this zone. I'm looking at, remember we talked about this sort of head and shoulders right here. Shoulder, head, shoulder. And we also have this one, shoulder, head, shoulder. So I'm going to do, this is the major one right here. This would be a target. This would be a target down to 31 cents. I think that's probably less likely unless the market as a whole, it just takes a large tumble. This sort of head and shoulders right here is probably more likely. And this would be from measuring from the neckline to the top of this head right here, and bringing this down right in this region would bring us in confluence with this sort of trend cycle, this sort of low right here, basically to the 34.2 cent area. Question from Learning. Sir, what are your thoughts about the BRC20 tokens? I have mixed feelings about it. I think it's incredible that they're trying to that the ecosystem is growing. I think if anything, what it's going to do is drive some people from the slowness to potentially, what would be interesting is having some sort of connection of Bitcoin with Lightning Network, so you can trade some of the Bitcoin and BRC tokens through the Lightning Network, so we can reduce the amount of traffic and all the backed up sort of transactions in the mempool, which is basically causing the higher transaction fees. So I think it's good. We're seeing some hiccups from it right now because it's making the network slower, but I think issues cause innovation. So I don't think it's something to worry about. I think it's good to have any part of the ecosystem broadly developed. So I'm not worried about it. Now with getting back here to the Turbo TA, I do think that if we're able to hold this zone, we come back up. If we do lose this zone, I don't think we have that much further to fall. I would say 33.5 to 34 cents if we do fall. I'm looking at this to sort of resolve in here and then to actually break out to the upside. Let's see some of the other ones. I want to go to my other chart. ICP, let's look at ICP. ICP falling, we're on the 4 hour chart. Let's go ahead and delete this. Now, when we're looking at this, we have the two lower highs. We have this trend line that is sort of this sort of zone. This does look like it's formed a little bit of a falling wedge as well. We could see right here. If this loses, we'd be looking at probably lows down here, option J, down here at $4.83. If we really lose this, then we could fall much lower. Next one down would be option J, $4.54. So these are the two levels I'd be immediately looking at. To the upside, I'd be looking at essentially the price action coming back up into the zone, and then we basically be tapping this area. We'd be slowly moving up here, but the $6.52. Now, what I do want to cover, because I have not covered it yet, is when you're looking at any asset and you're trying to figure out, even on the smaller time frames, we're trying to figure out where a price can go. If we come out here, we come to the 3-day chart, we come to auto, and I want to go to a different chart because we're going to go right here. So what we can do is, if you're trying to figure out where a price can go, first off, we can take a Fibonacci tool from the previous high, option F or Alt F if you're on PC, and then click on your screen at the high to the low, and you can sort of drag this across. Regardless of all the other stuff on your screen, you're basically getting from the high this high to the low. And then what happens is, if we double click on the chart, we can see that we get these extensions about where price will likely go. So down here, when this happened right here, we could have projected with the Fibonacci tool with pretty high accuracy about where price went to the 3.618. We can also see this right here, option F, from the top to the bottom. Now, this went all the way up. This was a very strong cycle. This went past the 3.618, but that still would have been a great area to take profit. But what we're seeing is, as price action is maturing, we're seeing that, let's see, is there a 5.618? As things are getting mature, we're seeing there's a little bit of a reduction over time. We're getting a reduction, diminishing returns over time of where price action can go. We're going to do 4 and 5, not 53, 5.618. What is going on? 5. There we go. So we can see this is getting higher and higher, but when we come over here, this got all the way up to the 3.618. So now if we took this from this high, option F, to the top, to the bottom, we can see that it's probably going to be somewhere within the 1.618 and the 3.618, somewhere in this region. I would say likelihood is it's not going to be such a reduction that it's going to come down here. And I'm not going to give you what the number is, but I would give a range for this asset, and every asset's going to be different. It would be probably somewhere in this range in here. So, you know, for Bitcoin, probably 123 up to about $200,000. And we're going to get more clarity on that as it goes. Now, when we're looking at any other asset, if you're trying to figure out where things are going to go when they fall, similarly, let's go ahead. Let's look at a different chart. There we go. So we can see similarly looking at Ethereum, previous cycle, we're looking at the 3-day. We can go from the top, option F, top to bottom. And we can see, look at this. Top to bottom, Fibonacci predicted that this was likely, it showed the 3.618, and we know that price kind of gets at least to the 1.618, but this got all the way up to 2.618, retest back down, got up to the 3.618. Now, if we wanted to get some sort of vision about where this may go in this cycle, then let's assume this is a low, then we can go from this top, option F, to the bottom. And we can say, similarly, it's likely going to get somewhere in the 2.6, somewhere in this region up to 3.618, depending on regulation, if there's more institutions coming in because there's good regulation, or if there's less institutions or money coming in because there's just ridiculous regulation. So I would say that, you know, somewhere in the 7,366 level up to about 15,000. Now that's a huge range. And that, of course, is going to be drastically different based on regulation. If I had to assume, I think it would probably be on the higher side up in this region here, because I think the ecosystem is still expanding so explosively. And so we can see a target based on the Fibonacci of where this could go. So this is how we do that. Now, similarly, if you're looking, we've already talked about Fibonacci targets when you're looking at more local price action. And that is when you take these sort of zones, for instance, on this move right here, if you missed the move on the downside and you wanted to see where it's likely going to go up to, well, we can see, let's pull this down to the bottom of that. We can see the likelihood is price is probably going to come somewhere near, if not to the golden pocket to the upside. Okay. We can see this also right here, option F from the top to this bottom. And we can see price came almost up. Now, this is not the best representation of it. We can see this most clearly on Bitcoin. It's a crazy chart. We can see this most clearly on Bitcoin when we're looking to, let's go to this chart right here. This chart right here. Okay. That's not the chart I wanted to do. Okay, now we're going to delete all these. Now, so we've talked about this a number of times before we go. Option or Alt F from the top to the bottom. We also saw on this rally, this is probably a good spot to take some profits. It is the golden pocket, 0.618, 0.65. Similarly, we can see this happened again, I believe, right here. The reason this rally stopped at the zone, very likely, is this golden pocket right here. And not only do we break above it, we use it as support. The golden pockets for intra-trend moves to identify where trends may be going, retracing to or pulling back from relief rallies or relief rallies up or pullbacks on moves. You know, if we're pushing up, this is a pullback. When we're coming down, this is a relief rally. You can sort of see those on small trends, large trends, macro trends, and also project where price action can go. So we talked a lot about price action today using confluence of all these different things. Make sure you go back and watch this video again if you need to. There's a lot of data in this. I wanted to make sure people have a good basis for how to understand where price action is going, where it may be headed, how you can use the basics of price action, tie that into support and resistances, horizontal and diagonal lines, as well as integrating that with trend signal indicators like the BitLab Trading Stack or traditional indicators as well. But that's all I got for you today. Make sure you come over to BitLab Academy, follow this page, retweet this daily tweet right here. Let's see, there's only 17. I know there's more. Retweet this daily tweet, hit this like button. You're going to be entered to win. I'm drawing tomorrow. We draw every Friday. And then, of course, make sure you're following me here. We're here at my page. We are doing our Twitter Spaces tonight at 6 p.m. Eastern Time. Come follow me. Get involved. I'll be doing a tweet about it right after this. I'd appreciate it if you shared that or just came and joined. It's going to be some good people in the discussion this evening. With that, I bid you adieu. Adios, muchachos. Thank you for coming. Thank you for always tuning in. BitLabAcademy.com. Hit that like button, sucker.